gives me great pleasure to introduce our first guest of the FT Commodities Asia Summit 2021. It is Jeremy Weir, the Chief Executive and Chairman of Trafigura. We're actually meeting in Glasgow during the COP26 summit, so that's very good. I'll get a chance to ask Jeremy about his impressions of the summit and what might come out of it, but also there'll be time to talk more widely about commodity markets and also the performance of the company in what has been another extraordinary year for commodities. Jeremy, welcome to the summit.
Thank you, Neil. Pleasure to be here.
Can we start with COP then? You've been here in the first week, you're back in the second week. What are your impressions?
I think if you compare with previous COPs, which has been very much sort of government-led, what we're seeing is a real, industry-leading process here. We're here, we're making commitments under the First Movers Coalition, and other sectors and other industries are really sort of, grabbing the bull by the horns and just and working out how we can address the decarbonisation issues. What we now need is governments to really, follow on with policy changes and how do we adapt some of the, the initiatives which has actually been put forward by industry. So that to me is a major change. There's obviously some very serious, meetings actually with the part of the IMO next week. So we'll see how some of the issues that we're addressing around shipping are going to be taken forward.
Yeah, I think that's a good point, because compared to the previous COP, I think industry has stepped up. Last time it was more about governments putting things
Correct.
in, but now it seems to be industry and finance leading the way, and governments are lagging potentially.
Yeah, very much so. And again, I've some of the various panels I've been part of, or some of the various initiatives, you are seeing industry in all parts of the sector, which is interesting, getting together. Ship owners, fuel suppliers, marine fuel suppliers, and also people like ourselves, which are big users of vessels as well, both buyers and also users of vessels. So it's a very interesting set of dynamics trying to address a common goal.
Yeah, when the event does wrap up, what do you think success would look like from this out?
I think we've got to look at what happens with Article 6 in terms of if there's some sort of resolution around that. We really do have to have concrete goals, and as a business leader and also as part of a business, we want to see significant adaptation by the policymakers. We want governments to understand what we're trying to achieve and also provide a framework within which we can operate, because once we have that, there's all the willingness to do things. Mm-hmm. We just need to have, if you like, a structure to be able to get there, and that's what we really need, and particularly in certain aspects which are global. For example, if I come back to the shipping, we need some sort of global carbon levy on the shipping industry. It is a global business. Mm-hmm. And if you start to sort of see it fragmented into sort of industries, like you see the EU ETS, which is a very good initiative, but it does provide some fragmentation, and so therefore we need to look at it very much on some of these issues on a global basis. Yeah,
talking about shipping, IMO is a UN body,
yes.
But do you think that organisation is moving quickly enough then to address?
Well, again, we've seen, I think it's 14 countries now sign up to the initiative, in terms of wanting to sort of have a zero carbon by 2050 emissions in the industry. It's a pretty strong signal, and with the industry also part of that process as well, let's see what they come up with. But I think, they've got to have a look at exactly what industry wants and what other governments and large governments are willing to commit to. So therefore, we will know next week. I'd like to see some movement.
Okay, well, let's move on from COP and discuss energy markets. We've seen, I don't know whether you call it a crisis or a power crunch, certainly in parts of Europe and Asia. Do you think this is the first sort of crunch of the energy transition, and we may see others following?
You raised the point of transition, and that's the issue here. I think there's many sort of people which believe you could just flick a switch and go from hydrocarbon to non-hydrocarbon based energy. That is not possible. There's a lot of infrastructure which has to be built. And if you like, if you're going to renewable energy, if the wind doesn't blow and the sun doesn't shine, we have a problem. So we have to provide baseload power. There's a lot of challenges within this transition. Doesn't mean we're not willing and we shouldn't be willing to do it, but there's a lot of challenges. And if we look at the European situation, let's just look at what's happened. We had a late winter in Europe, for around March. We then had gas being pulled across to North Asia because of industrial production. We then had increased industrial production in Europe, and then we had also not great, if you like, renewable power generation over the summer period. We then, people believe that we're not seeing the Russian gas coming through. In fact, Russian production, okay, some of it's been drawn into Turkey, but ultimately it is still flowing. Norwegian is at full tilt, and the Netherlands gas production has stopped. We haven't got enough gas at the moment, quite frankly. We're not storing for the winter period. So hence there's a real concern that there's a potential, if we have a cold winter, that we could have rolling blackouts in Europe from a power position. That's a problem. And so therefore, what we have to understand is that we have this transition. We are using coal at the moment. Obviously, we want to phase coal out over a long-term basis, but we need to understand that we need to have power, in developed and in the emerging markets as well, through this whole transition process.
So, I mean, fossil fuels then are going to be with us for some time to come. I mean, inevitably, there's no way around that because renewables can't scale up quickly.
Well, if you want, I think. As one senior banker said to me quite recently, what will be the shift in mentality if you can't cook, if you can't heat your homes, and maybe if your business isn't operating because they've got blackouts. So I think now we must have a trajectory to decarbonise, that's for sure. But I think we've got to recognise that we do need power supplies, and if you talk about emerging markets, they need to industrialise. They need, they've got their priority as well. So we are going to have this transition from a hydrocarbon-based energy source to reducing that over time. But again, over time, and it could be coal and even oil, where people, have we reached peak oil production? Possibly, or maybe it's in the near future. But I don't think oil consumption is going to fall off a cliff. There'll be a long fat tail that's associated with that because, again, energy demand is also increasing.
Yeah, and I mean, just rationing investment in fossil fuels, oil and gas, etc., is not going to accelerate the energy transition. It's just going to leave us with an energy shortage.
Correct, and we're seeing that now. We're not, if you look at the amount of capital that is available, either be it equity markets or in the banking finance markets, people are steering away from it. So the cost of capital is increasing for those sectors, and even not available to certain sectors. And so therefore what we're starting to see is we're not seeing the replacement of reserves. Oil has gone from, a 15-year reserve life to a 10-year reserve life in a short period of time. So we're seeing significant reduction in capital investment just to replenish the existing reserves that we will need for the future.
But you are prepared to invest, aren't you? I mean, the Russian example of Vostok there. I
Correct.
mean, in a sort of a new project. So, I mean, even though banks, institutions, fund managers might be shying away from this sector, there's a role for the commodity traders and companies like yourselves.
Well, correct. And look, we've been joined by others in that investment as well. But what is clear is that we have invested in low carbon intensity production of oil. It's a large field. Oil is going to be required. So therefore, that was the rationale from our investments. Not as though we're shying away from our other investments.
Yeah.
We're doing a lot in the renewable space as well. But I don't think you can turn around and say, okay, you can't invest in this, because otherwise we're going to see extreme price moves on oil. And we've already seen, quite, elevated prices. And we're seeing a tight supply at the moment, particularly if you look at the current situation in the oil market. So it's, I feel very strongly that we still do have to invest in these industries to provide the energy for the future.
Yeah, well, I want to come back to the oil price in a minute, but just while we're talking about Vostok, another element of that deal is you working with Rosneft now to try and sort of benchmark or assess their carbon footprint.
Correct, and look, I spent some time, it was 2 weeks ago, with some senior executives of Rosneft, and we are looking at ways which we can utilise their resource capabilities and ours as well, and work out how we can help decarbonise. They're very, very focused as an organisation to decarbonise their production as best as they possibly can. It's all the way from the top of that organisation. So and we're working well with them to try and find ways in which we can do that.
Okay, what sort of skills are you bringing then? I mean, how do you can assess the carbon footprint of a commodity now?
Correct. I mean, we've established a carbon trading team, and it's really, what's interesting is that people shy away from decarbonisation, and I think it's a great challenge, but also it's a fantastic business opportunity. At the end of the day, we're a service company as part of our supply chain management business platform. And what we now have a process whereby we can calculate effectively from cradle to gate the carbon footprint of the commodities we move and the carbon intensity of the commodities that we're shipping. We're still work in process, but we're able to do that, and the objective is to have that externally verified. So therefore, we can come up with our customer base and say, this is the carbon footprint of this product that you are buying, all the way through to your gate. And as a result of that, we then look to assist them in terms of can they mitigate that? Is it different transport routes? If it's different forms of commodities? Is it some degree offsets? What may it well be to try and achieve that? So therefore, it's very much intertwined with the business we're doing. It's an additional service.
Okay, and that can go across commodities then? It's
Correct,
not just
that's the objective. We're obviously starting on specific commodities, but our whole objective is to provide that to all the commodities within which we trade.
That's interesting because, increasingly big consumers are looking to know their carbon footprint. They want to know the provenance of this. And you've done a deal with Tesla with your Goro asset in New Caledonia. It's quite interesting the car makers getting that entwined sort of thing in the supply chain.
We're seeing across many different sectors. People want to know what their carbon footprint, because their end customer wants to know what the carbon footprint is as well. And so therefore it's getting quite technical. But yes, the car industry, the phone industry, all sorts of sectors are wanting to know what their carbon footprint is. And it's, if you look at, for example, the e-vehicle business, the nickel business. Nickel from certain locations in Indonesia, for example, has a very, very high carbon footprint compared to other sort of sulfide-based producers. So, and people need to understand that, because at least they, as buyers, they can make their decisions.
And are companies like Tesla, the phone companies you mentioned there, becoming worried about security of supply? Is that an increasing issue for them?
Yes, it is. And I also say that governments are starting to become aware as well, because there are, there's recent announcements of what's on the list of critical minerals, for example, in the United States.
And nickel made it on, I think.
And nickel made it on, correct. And what we are sort of contributing to that debate and saying, look, particularly with the likes of copper and other metals, which are very important for the electrification and the energy transition, that some of these metals, they're just not going to be available due to the increase in demand. We're already seeing significant increase in demand, not just from China, but also from the US and from Europe. And we expect to see significant deficits in some commodities. You've already seen it in copper, for example. So therefore, people tend to think, we just, we'll get copper. Well, actually, no. Cobalt, nickel could be problematic unless we start to appraise, without lowering our standards, how we can commission mines earlier, quicker, more efficiently. We need to do these things, otherwise we're going to have a bit of a problem. Yeah,
because it's probably 15 years from sort of finding the deposit to getting it permitted and into production.
Correct. And again, some of the discussions we had in the United States recently is almost saying it's very difficult to get any mine up and running in those locations. So therefore, you have to look at other locations, and therefore you can get into some geopolitical debates around that, given the influence of other governments and other countries in certain areas such as sub-Saharan Africa.
Yeah, no, that's a fascinating subject, that sort of geopolitics of commodities. But could we just go back to oil for a moment? It's had a great run this year. The price is almost back to where it was in 2014. Do you think this sort of move up has run its course now? Or could it push a bit higher, even go to 100? Well,
I think longer term, I think 100, a three-figure number for oil is probably well and truly on the cards. I'm not going to give you the time frame, but if you just look at what's happened, we've seen a very strong gasoline demand in the US over the summer period. We're seeing a recovery still in aviation fuel. We're seeing a heavily backwardated crude market. I think it's something like over $1 in the front month, $10 in over 1 year, and $20 in 2 years. So you need to see a higher forward price to incentivise new production, even if the capital is available. But basically, what we're seeing, obviously, we've seen OPEC plus react. They've brought on some additional barrels. They've stuck to a policy, etc., like that. But we are seeing a very, very tight oil market.
But it's not artificially tight because of what OPEC are doing. Demand is there. Is demand back where it was pre-COVID then, or?
Slightly lower, but it's particularly because of aviation. But we're seeing a strong recovery. Okay, so therefore, but there is not freely available barrels. They would be attracted anyway, given the backwardation. So therefore, we do have to see additional supply. The issue is, can that come? Yeah,
because there are some OPEC members that probably can't increase supply very quickly.
I think the people need to recognise it's not a situation where you just flick the switch and you increase production. There's a lot of investment. It takes some time to do that. If you look at the US, there has been some increase in production in the US, but what they call the DUCs, or the Jordan uncompleted wells, that inventory has been drawn down. and we're not necessarily seeing the huge capital expenditure to increase production in those regions. So therefore, I think we have got a bit of an issue looming on oil prices. On a long-term basis, I think 100 plus on oil, yes.
Very possible. I mean, shale is interesting there because even at these high prices, the capital discipline seems to be holding, doesn't it, in that industry?
Correct. Historically, I think that the industry's been under a lot of criticism by sort of reinvesting earnings back into sort of new production, and if you like, the large producers have listened to their shareholders and adhering to a certain discipline around that. You're probably seeing maybe more in the private sector and the private ownership in that region, some production taking place, increase taking place. But in the large scale, sort of large IOCs, that's not necessarily the case.
Yeah, and I mean the market's so tight. I mean, we're hearing the US talking about releasing some strategic reserves. I mean, do you think that's a possibility then? Or?
I think it's a possibility. I don't think it's necessarily going to be a long-term fixer for it. Maybe it'll have a temporary impact on price, and maybe it's a signal. But basically, I don't think it's necessarily going to have a sustainable impact. If you're looking for a long-term impact on the oil price, you need capital investment.
Yeah. Can we just talk about gas quickly? I mean, there's been lots of stories in the media about the impact that these really volatile gas prices going up 5x, 6 times have had on margins and things like that. I mean, does that put you off trading the gas market? I mean, is it too difficult compared to oil for big commodity traders to get into?
No, not at all.
No? It
has been challenging. At one stage, I think the initial margins were something like 25% of the price. And if
wow.
So therefore, the market almost became dysfunctional as a result of that. Mm-hmm. But ultimately, it's gas is a very important part of the energy stack. As we trade power, carbon, gas, oil, all different parts of the energy stack effectively, we need to be, that's an important part of that component, LNG as well, I should add. So therefore, we will, it's a very important part of our energy mix, and will continue to be a very important part of our energy mix. What I would say is that I think, what it has shown is that, you probably have to have scale, liquidity, risk controls around these things, because one thing you cannot afford to have is when you have such volatile movements or a huge requirement of capital for initial margins and variation margins on the exchange, you have to maintain your discipline to manage the risk, because our margins are relatively thin as a business. So therefore, if you're not doing that, therefore you expose yourself as a small company. And that's why I think you're going to just see, actually it's across the entire commodity sector. The larger players are being the ones which are sort of, if you like, increasing market share and developing as a business, whereas the fringe players are finding it more and more difficult because of capital availability and the requirements to run a business of our size and magnitude.
So is the capital availability then because some commodity trade banks have pulled back from the industry and now only want to sort of bank the bigger guys? Is that?
Look, some obviously has pulled back, as you're aware. Some of the European banks have pulled back, but also others have stepped back in the void. But what the banks want is they want their capital paid back, which is obviously fundamental. Mm-hmm. So and therefore they want to do the companies which have got appropriate risk controls, alignment of accountability, have a global footprint, can manage price volatility, understand markets, transparent in their process. For us, providing our financials, to the marketplace, responsibly reports how you're addressing decarbonisation, all these things, which is important to them. They want to have partners, which also it's important to us as well. So therefore, that alignment is very key, and that's why capital can flow to the larger organisations. Yeah,
and I guess scale has been important this year because commodity prices across the board have gone up, which is obviously makes you need more capital to do.
They have, but what is interesting is I think historically what we've seen is obviously all commodity prices rise at the same time. We're seeing a lot of dislocation. You look at the steel and the iron ore market versus the oil markets. You've seen, iron ore prices go from, over $200 to $80 in a period of probably, or $85 in a period of 2 months. Steel has come off significantly. So we're seeing a lot of changing dynamics at the same time oil prices going up. So I think you need to have, and this is where, we've spent a lot of effort, deep analysis in the underlying commodities within which you trade on a global basis. And so therefore, if you have that, you really start to understand the dynamics of the commodity markets, both the interplaying geographically, but also having specific knowledge of the underlying commodity markets. And that's been a very powerful tool for us this year.
Okay. Well, talking about this year, just talk about the performance of the business. 2020 was a record year. The first half of this year, your financial year runs to September, was
Correct.
good. How was the second half? As good?
It was a very strong year for us. I have to sort of say I'd say we're building on strengths from the previous year. We have some challenges. As I said, commodity prices going up. You've got to finance yourself. So these sorts of things. And what I do feel is the company's gone to another level, and that this type of performance, maybe not this year, is sustainable on an ongoing basis. But really, we've gone to another level in terms of breadth of business and risk management capabilities, and I'm quite encouraged, particularly the opportunity set again from this decarbonisation process and how we can provide services to our customer base.
Yeah, talking about the business, in the past 12 months, you've done quite a few deals. There's Vostok, you've obviously Nearstar you've gone into, but then you've exited things like Matsa as well, the Spanish copper mine. What's your thinking on the portfolio? We're going to see more divestments, we're going to see more acquisitions. Where are you thinking you're going to position
the general
things?
process? We'd like to have a discipline around our capital allocation for a start. So hence the divestment for Matsa was one whereby we've been in that asset for 16, 17 years. I was involved when we broke ground there, when we were a shareholder of a listed company in Canada, and saw it all the way through its fruition and built up to be a very significant mining complex. We got to a stage where, quite frankly, there was not much more we could do together with our partners, Mubadala, and we said, okay, now it was time to sell. We're not taking a view on copper prices long term. People would say, why did you sell it? Because if you've got a strong view on copper prices.
Presumably you keep the offtake anyway.
Yeah, we have the commercial rights as well. We had it when we sold it to Mubadala, so it's a life of mine offtake arrangement. But it's more about the economics around the mine itself. I'm very happy for the acquirer Sandfire. I think they've got a great asset, and so it's going to build something hopefully they'll be very successful in that asset. We will have we've got if you like, increasing breadth of our business. So it's oil. You mentioned the Vostok deal. It's minerals and metals. We'll still do deals on mining, and it's also, if you like, infrastructure, but also in the renewable energy space. We have got a number of projects which we're developing in the renewables energy space, both wind, solar, but also in marine fuels, hydrogen, etc., which is a focus. I think one thing which is important is that if I can be critical of ourselves historically, probably taken maybe some of the single asset exposures we had as possibly been too big. We like to work with partners. We've proven that we can find good investments, and therefore our role is to, if you like, is to take minority stakes alongside partners, or we can have operational stakes, but bring in partners alongside to diversify the capital that we have allocation across various sectors.
So don't take all the risk on your shoulders.
Correct. I think so. Yes. Look, Nearstar is one. We have a lot of risk, quite frankly, but we're turning that business around, and this is something I actually think the dynamics of the smelting industry are going to be changing quite a bit over the next 5 years, and I think we'll be well positioned in that asset.
Yeah, just talking about the renewables business, we have discussed it before, but how is that coming along? And also, a cynic might say you're making lots of investments. You mentioned some of them, marine, hydrogen. Is this really just greenwashing from a company that's deeply entwined in the sort of the fossil fuel chain? You've described it as being it could be another pillar for Trafigura's business.
I think if you do any greenwashing in today's world, you're going to be very, very punished. So, and what I'm really encouraged by is that this is a commitment from the senior management team of Trafigura all the way through. People see what we're doing, they're very encouraged by it. So there's a real momentum within the organisation. Our existing business is very important. Our oil and energy trading business and gas and LNG and our products, our minerals and metals and bulk commodities, they're very important businesses. But this is a great opportunity set. The world is changing. And what we've done from some investments point of view is start on a venture capital basis, and now they're becoming mainstream, which is quite exciting. So we've become early movers in some sectors, particularly hydrogen. One investment we've done in Switzerland, H2 Energy, is a case in point. And so, but I think there's great opportunity sets for this business. And I'm not necessarily looking at the particular carbon footing of that business sort of saying, well, what credit's going to give me in the international press or whatever it might be. It's got to make sense as a business, but the world is moving this way. And so therefore, and our power team has had its first full year last year, our last financial year, It was very pleased with the results. The carbon trading team is working very hard and doing some very interesting things. And we have ammonia traders, etc., in our team. So these things are starting to build, and I can see it developing very, very quickly. And I stick to the previous comment. I do think this sector will be a third pillar for our business.
I just want to go back there. You mentioned copper. You have been bullish on it. I mean, there was obviously sort of a big draw on LME stocks, which you and other people were sort of involved in, as demand was quite good in China. I mean, are you still bullish? You still think prices are going to?
Yes, I mean, what do we see? We've seen a hiccup, can we say, in China, more power related. I mean, two things is that you've seen
power and property.
Power and property. On the power side, there has been some cutbacks. Primarily on the supply side, by the way, and there's a concern within China, for, if you like, on the power availability, and as I said, cutbacks there. The other sector has obviously been in the property sector. We've seen a significant reduction in activity in that sector as a result of Evergrande and others, and that's seen steel consumption well off, and cement, I'm assuming, is well off as well, and demand for other metals per that sector. But quite frankly, you were seeing in that sector, I think I'm right in the stats, where we saw almost a 20% increase in costs in a very short, like over a 4 or 5 month period of time with cement and all the other metals. So therefore, if you like, the government had to take some steam out of the whole process as well. So therefore, we have seen a reduction in it. However, despite the copper price coming back from $10,600 or whatever, $10,500 to sort of the currently, I think, around $9,600, you have a heavily backwardated market. Not much metal has been extracted on the exchanges. I think 20, 30,000 tonnes or something. Despite the huge backwardation, the market is extremely tight. But we're seeing, if you like, a macro environment where people are sort of, okay, what is happening on demand on a forward-looking basis. Personally, what we see is very strong demand still out of the US, still out of Europe, and we see, demand still in China. So while we may see, if you like, a leveling off period for a period of time from a price perspective, once we get through possibly Chinese New Year into sort of maybe end of Q1 of next year, I think, I'd like to know, unless we see a major meltdown in industrial production out of China, I think we've got a pretty critical situation with respect to copper prices.
Okay, right. We're running short of time. Just a couple of questions just to finish up on. I mean, coal has obviously been a big focus of COP. I mean, how much? I mean, you trade coal. How much longer do you think it's going to be possible to trade coal if banks start clamping down on actually not just financing projects, but actually not allowing people to trade the commodity?
Look, it's very hard to answer that question. You've got to answer the providers of capital for that. But the issue is, look, if we're going to decarbonise, we need to reduce our coal consumption. But we also, if you look at the commitments that India have made during COP26, they're still reliant on coal. They need to phase it out. Other emerging nations need coal. It'll phase out over time. China, as we know, is a huge producer and consumer of coal, so it has to phase out over time. But the timeline for that is very difficult to analyse. But I think we are involved in the coal market, and we'll be involved with the coal market, while the customers, you still need to move it. We're not going to invest in coal. We've said that. But we are. There is this issue, and I can't tell you what the timeline is. But I think one of the biggest problems that we have is the fact that emerging nations still need this as a form of fuel.
Yeah, and there's no new supply coming on.
No new supply coming on, and so therefore some of the coal producers are doing very well despite, if you like, the recent price fall. So yes, there's no new supply coming on. The other thing too, I think, is a bit of a hope is, can we have some of the carbon capture systems which have been developed at the moment? We have invested in some which may be applied to sort of coal-fired plants for thermal energy production.
It seems to promise a lot, CCS, but we've yet to see it.
Yeah, but look, as I mentioned, we have this venture capital arm, and we are investing in some of these technologies, and we're following them very closely, both in the marine shipping and other forms. So hopefully, again, there's a desire by business to do things. I think there's a real challenge out there. So I do think, technologically speaking, I hope that we can start to address some of these problems.
Okay, just one final question, and it sort of pulls in coal and a lot of things we've talked about. I mean, ESG and responsible sourcing. I mean, how do you think the policy standards you've put in place stack up compared to your peers? How do you think you're going?
Good question. Look, when we do when we do our evaluation of where a source matures, there's a very detailed KYC process. You also know what we're doing in the DRC from a responsible sourcing point of view. You know, we are trying to put some regulatory framework around artisanal mining. We're working with the DRC government. They've put in place now their own program under a company called EGC. They have their own regulators. So we're trying to provide some assistance for these countries to ensure that supply chains, even in difficult industries and difficult jurisdictions, can still be provided and monitored and done properly. When I look at our businesses, I do think we have very high standards. We wouldn't be in existence if we didn't have those high standards. We wouldn't have banks lending to us if we didn't have high standards. And actually, quite frankly, my colleagues wouldn't want to work for the company unless we had high standards. So that's very clear. And you see it in our responsibility report. We're very clear in what we do well, where we still have challenges. I'm actually proud of what we've achieved and how we've got there, but we've still got more work to do. With respect to our peers, have to leave them to comment on that. Obviously, there's people have different standards. Like I said, ask them the question.
Okay, so I mean, just to sum up then, I mean, 2021 is looking like it could be another record year for the company. I mean, what will you do with that sort of excess cash that you might generate? What's the thinking? First
of all, you have to have robust equity base and balance sheets. So like anything, we will retain some of earnings, and we have an investment program. So therefore, we'll continue to look at investments on a controlled basis of where we can support the existing business and expand the existing platform that we have. So, I think over the last 2 or 3 years, you'll see in our results when they're published, we've really have increased our equity base, and the company is in a really much stronger position than it was, say, 3 or 4 years ago. Because I think the commodity markets are going to be very dynamic. I think the business environment is very dynamic. It's changing rapidly, and we as an organisation, I think, are well positioned to be part of that process.
Well, sadly, we've run out of time. We could have talked for much longer. I mean, there's so much happening, as you say, in markets with business structures and sort of the opportunities and challenges out there. But Jeremy, listen, thank you very much. Great discussion, and
Pleasure, Neil. Great to see you again. Thank you.